Welcome to Wealth and Means. Advice dressed up like hard work.
Each week, we explore ideas that help you pause, reflect, and think more deeply about the opportunities all around you.
It's the perfect mix. A little information, a few stats, some real-world insights, and just enough deep talk to make you feel smarter before your second cup of coffee.
Today's episode is stacked. What you didn't see in the news, your 5-minute head start in Wake Up Ready, a knowledge bomb on the time value of money, a quick fable in Humor Me, the greater debate, and we'll close with our Invent Again spotlight on Vladimir Zworykin, the vacuum tube visionary who taught electrons how to draw.
And a quick thank you to our sponsor, Nost Moments at nostmoments.io. Share your most precious memories. Share the Nost Moments.
All right, let's get started with what you didn't see in the news. Because the real stories don't always trend, they ripple. Item 1, the new heavy metal war. While everyone was arguing about TikTok bans, China quietly tightened the spigot on rare earth exports, the metals that make your EV hum, your iPhone buzz, and your fighter jet fly. Washington's response? A sledgehammer. 100% tariffs on Chinese imports starting November 1. Here's what that really means. We're not just in a trade spat, we're in a full-blown resources Cold War. China controls roughly 70% of supply, 90% of the processing capability, and the U.S. basically said, fine, keep it. We'll rebuild the periodic table ourselves. This is where geopolitics meets geology. Expect startups claiming to reinvent extraction, investors sniffing out new mining hubs in Canada, and politicians suddenly pretending they care deeply about scandium. Takeaway: if the 2010s were about data monopolies, the 2020s are about material monopolies, and this one's magnetic. Item 2, baseball's algorithm of hope. Somewhere between crypto collapses and AI hype, baseball became the comeback story of fall. The Mariners, forever bridesmaids, just got their ace Brian Wu back for the ALCS. The Blue Jays, still chasing a title since 1993, but the bats are loud and the vibes are immaculate. The business angle. Baseball is quietly morphing into a content machine. Gambling tie-ins, streaming rights, AI-driven fan metrics. This postseason is testing whether nostalgia can still sell in a dopamine economy. Takeaway: Wu might be the pitcher, but the real pitch is emotion, and sports just found a new algorithm for it. Item 3, Port Wars, the sequel nobody asked for. Trade wars are back, and this time they float. China just started charging special port fees for U.S.-linked ships, basically a cover charge for showing up with an American flag. Washington, never one to skip a brawl, is threatening fresh export bans in return. This isn't tariffs in a spreadsheet, it's supply chain jiu-jitsu. Ships reroute, costs rise, and logistics CEOs practice their temporary disruption voice for earnings calls. Behind the scenes, freight companies are redrawing global maps, and every rerouted container is a tiny inflation bomb waiting to go off. Takeaway: the trade war has officially left the internet and boarded the cargo ship. Buckle up, geopolitics now has a shipping manifest. The summary: rare earths are the new oil, baseball's back as a brand, and the global trade war just went aquatic. None of it trended on X, but it's exactly what your smartest friend will drop at brunch to sound ahead of the curve.
Translation: watch the rocks, the bats, and the boats. But means you forgot the most important story.
I did? Which one?
The $100 billion thumb problem. We live on our phones, doom scrolling, impulse buying, and pretending to read just one more email. A new industry report found that mobile landing pages convert 8% worse than desktop, even though 83% of all site traffic now comes from mobile. That's not just bad UX, it's a giant, invisible leak in the digital economy. Billions in lost sales, abandoned carts, and I'll do it later moments are adding up faster than you can pinch zoom. The dirty secret? Most websites were designed by desktop users for desktop users, and nobody fixed it because, well, everyone was too busy scrolling on mobile to notice. Businesses aren't losing customers, they're losing the thumb wars. All right, time 2. Wake up, ready? Your 5-minute head start on the markets, the economy, and the stories that will move your week. Grab that refill. Let's go. Monday. Quiet in the US, no big macro fireworks, but the global stage is humming. BHP's quarterly operational review lands late day, giving us a pulse on iron ore, copper, and cost pressures across global mining. If production holds steady, that's a vote of confidence for industrial demand. If not, it's another whisper of slowdown. Stateside, the oilfield crowd, Halliburton, Baker Hughes, and friends are warming up for earnings later in the week. Calm skies over Wall Street. Storm clouds gathering over commodities. Question for Monday: are we still digging into growth or starting to hit bedrock? Tuesday. Now the week starts drilling down. Halliburton reports before the bell, a de facto forecast for 2026 oil and gas capex. Late afternoon, the API drops private oil inventory data, the number that can swing crude faster than a tweet from OPEC. A draw equals tight supply. A build equals demand fatigue whispers. Meanwhile, Texas Instruments, AT&T, and GE Vernova open their books, sketching chips, comms, and clean energy in one day. Tuesday's takeaway: is industrial demand quietly rebounding or just running on fumes?
Watch the rigs and the resistors.
Wednesday. Midweek is test day for both oil and algorithms. At 10:30 a.m., the EIA's Petroleum Status Report confirms or contradicts Tuesday's API tease. Then, after the closing bell, we have Tesla and IBM earnings. For Tesla, everyone is obsessed with new models and robotaxis. But the real question is, what's the status of their profit margins after recent price cuts? The margin update will move the entire EV sector. And for IBM, we need to know, is their big push into hybrid cloud and AI actually translating into revenue and profits? Their results are a proxy for corporate AI spending. Theme: speed, software, and staying power. Thursday. Domestic split screen. At 10 a.m., existing and new home sales, the twin pulse points of U.S. housing. Are higher mortgage rates still freezing buyers, or are builders carrying the load? After the close, Baker Hughes and its LNG order book signals whether the energy transition build-out is accelerating or stalling. Question: can America's foundations, housing and energy, stay solid as rates bite? Friday. Macro main event. At 8:30 a.m. CPI. If inflation cools, the soft landing story lives. If not, higher for longer gets another season. At 9:45, flash PMIs, real-time growth check. At 10 a.m. University of Michigan sentiment, the street-level answer to "do people still feel rich?" Meanwhile, Baker Hughes hosts its call and the rig count drops at 1 p.m. because even on CPI day, oil won't share the spotlight. Closing thought: is the economy genuinely cooling or just catching its breath? That's your Wake Up Ready rundown for the week of October 20th. Stay sharp, stay curious. Remember, information is power, but timing is everything. And now it's time for a knowledge bomb: the time value of money, why the smartest dollar is the one you already have. Picture this: you're holding a $100 bill, clean, crisp, full of potential. Someone offers you the same deal, same 100, but a year from now. You already know the right answer. Take the money today. Why? Because that single bill, right now, is a tiny machine for wealth creation. Money today gives you options. Invest it, grow it, deploy it. That 100 can earn interest, buy a share of your favorite stock, or start compounding in a Roth IRA. Even a modest return turns today's cash into tomorrow's more. Wait a year, and that free 100 is just 100. You've lost the scarcest ingredient in finance: time. And inflation is the silent tax. Prices creep. The $100 concert ticket now might be $105 next year. Future you buys a worse seat. Then there's risk. A promise of future payment is just that, a promise. Maybe they don't pay. Maybe the world shifts. Having money in hand removes uncertainty and starts the clock on compounding.
This is why a Roth IRA exists, why starting early matters. The 25-year-old who invests a few thousand now can end up with multiples of the 35-year-old who invests the same total later.
The time value of money isn't a textbook flex. It's about freedom. The dollar in your hand today buys more opportunity and more future choice than any dollar you're promised tomorrow.
The only question is what you'll make it do today. Humor me. Welcome to Financia. Population: 2 neighbors and 1 ridiculous idea. Alice and Bob both want a robotic umbrella that follows you and auto-opens at the first drop. Because in Financia, regular umbrellas are passé.
Please tell me they both have exactly $100 and the umbrella costs $200 next spring.
You're psychic. Alice invests her $100 at a magical 100% return because it's Financia and plans to buy next spring debt-free. Bob can't wait. He borrows $100 at 50% interest from old man Bankster, buys now, and struts around town under his buzzing rain drone.
Fast forward. Alice doubles to $200 and buys, smug and debt-free. Bob enjoyed a year of dryness, then owes $150, pays up, and ends with nothing.
The twist, Umbrella Tech leaps ahead. By the time Alice buys, a sleeker self-folding model costs $180. Bob, he paid interest for version 1.0. Alice paid more for yesterday's model.
Here are the morals of the story for me. A dollar today can grow, Alice. Waiting too long exposes you to obsolescence, also Alice. And impatience charges interest, Bob. The win is picking the right moment. Too early, you pay in interest. Too late, the world passes you by.
Or as Financia's weather report put it, 100% chance of irony with scattered life lessons. And remember, 100% returns are only possible in Financia. Do your own research. And now, the greater debate. Each week we host the greater debate, the debate that should happen but hasn't. Through the power of imagination, caffeine, and let's be honest, a full night's recovery sleep, we conjure what that debate could sound like. So close your eyes, let's set the stage. A sleek modern studio, cool light. The ticker behind the glass reads AI and the future of work. The moderator fades into the background. Two figures remain. One, a senator who's seen a lifetime of labor battles. The other, an investor who's built her career on betting early on human progress. That's right, it's Senator Bernie Sanders and Cathie Wood. And what unfolds next is the clash at the heart of our age. Senator Sanders goes first, voice gravelly, conviction sharp as winter wind. He leans forward and says, "We've been here before. Every new machine promised progress, and every time workers were told to adapt, we did adapt by organizing, by fighting for weekends, for fair wages, for the 8-hour day. But now, the phrase right to work doesn't just mean union politics anymore. It's starting to mean something darker, the literal right to still have a job in a world run by algorithms." Then he pauses, lets the number drop like an anvil. 4.4 trillion, that's what McKinsey says AI could add to the global economy. The question isn't whether AI creates wealth, it's whether that wealth creates dignity. Because if workers don't share the gains, the machines aren't the problem, the power is. Then Cathie answers, calm, luminous, the optimist with a spreadsheet. "Senator," she says, "every so-called job killer in history became a job creator in disguise. The typewriter vanished, but the written word multiplied. The loom threatened weavers, yet fashion boomed. The spreadsheet didn't kill accountants, it made them strategic. AI isn't erasing people, it's upgrading them." She smiles and adds her data point. 60% of knowledge workers who use AI daily report a 30 to 50% productivity boost. That's not annihilation, that's amplification. The moderator chimes in, "Let's talk numbers. Who's winning, who's losing?" Cathie takes the bait. At ARC, we've tracked over 200 firms using AI copilots. Developers on GitHub Copilot ship 55% more code. Support teams handle 30% more tickets. Satisfaction up, burnout down. And the smart firms, they're sharing the upside. Bonuses, profit-linked pay, performance equity, early signs of what I'd call AI dividends. But Bernie's not having it. He cuts in, passion flickering. Except when they don't. Klarna bragged about AI efficiency right before laying off 700 workers. You can't call that redistribution. That's extraction. Productivity that fires 5 people to keep 1. That's not innovation. That's economic cannibalism. Then comes the heart of the tension, conversion versus displacement. Cathie opens her hands, graceful, steady. We've been through transitions before. Elevator operators, switchboard clerks, typists, all gone, yet we still move, still communicate, still write. The tools change, human purpose didn't. AI won't erase humanity, it'll erase repetition. But Bernie just gives that little dry laugh he's famous for. the kind that says you're missing the point. Conversion's a nice word, he says, but not everyone can afford to be reborn. You tell a 55-year-old warehouse clerk to learn Python, and you're not offering hope, you're offering humiliation. Without policy, AI jobs will be the new American dream. Inspirational, but out of reach. Then policy and power, the true fault line. Bernie leans in again, eyes blazing. If AI runs on our data, on our words, then it ought to pay rent. That means digital dividends, retraining stipends, profit sharing for those displaced. Otherwise, we're back to feudalism, only this time the lords wear hoodies. Kathy fires back, bright, composed. Senator, you don't tax innovation into fairness, you invest into inclusion. Give workers ownership, not pity. Tokenized equity, performance-linked pay, AI ETFs, the tools exist. Let them own the future they're helping build. And then the humility moment. Bernie softens. Look, I'm not against technology. If AI can cure disease or clean the planet, I'll cheer. But innovation without inclusion is a betrayal. Efficiency can't come at the cost of empathy. Kathy nods. And I'll admit, disruption hurts. Some jobs will vanish, but creativity, curiosity, and courage, those always survive. The typewriter died, but the storytellers didn't. We adapt. We thrive. Bernie rises slightly, the orator again. AI is a mirror, not a miracle. It reflects whoever holds the power. If that reflection shows only boardrooms and billionaires, we've failed. The future of work must belong to the workers, or we'll just trade sweatshops for server farms. And Kathy, still calm, still glowing, delivers her closer. AI is the most extraordinary co-pilot humanity has ever built. It doesn't take your ambition, it multiplies it. The danger isn't that AI will take your job, it's that someone who learns to use it will. The future is still human, just faster. The moderator fades back in, voice low. Bernie Sanders, fighting for the right to work, in every sense of the word. Kathy Wood betting on humanity's upgrade. Maybe the truth lives somewhere in between. The future belongs to those who earn their leverage. That's the greater debate. Because sometimes the most important arguments aren't about who's right, but about who's ready.
Let's invent again. Vladimir Zworykin and the cathode-ray age. If you've ever stared at a glowing screen, a hulking tube TV, or the phone in your hand, you owe a nod to Vladimir Zworykin. He didn't just help invent television, he helped invent how we see.
Rewind to the 1920s. Radio ruled. Movies lived in theaters. Beaming live images through the air sounded like sci-fi. Zworykin, Russian-born physics-trained, X-ray seasoned, joins Westinghouse, later RCA, and tries to turn an obscure physics demo into a living room revolution.
Enter the cathode-ray tube, a vacuum tube with an electron gun firing a beam at a phosphor-coated glass screen. Steer the beam line by line, modulate brightness, and voila, motion. Carl Ferdinand Braun invented the CRT. Zworykin made it work for television.
Two masterstrokes, the kinescope, the picture tube that could focus, brighten, and sync a stable image, and the iconoscope, the camera tube that could store an image's light signal long enough to be scanned electronically. Eyes and screen, together at last.
RCA showed off his all-electronic TV at the 1939 New York World's Fair. History flickered to life.
And the ripple effects? During World War II, CRTs guided radar and aviation. Post-war, they became the heartbeat of computing. Oscilloscopes, mainframe monitors, arcade cabinets, all pulsing with electron beams.
The logic of his iconoscope, capture light, convert to charge, scan, is the ancestor of your iPhone's camera. CCDs, CMOS, silicon descendants of a vacuum tube idea.
Gamers still praise CRT motion clarity. Engineers still use electron beams in microscopes and chip lithography. And the whole digital video chain, capture, compress, transmit, render, still dances to Zworykin's choreography.
His real legacy? He made information visible. He turned electrons into storytelling and drafted the blueprint for today's pixel economy.
Before there was a display stack, there was Vladimir Zworykin, and a beam of light that never stopped scanning. Let's close it out.
And that's it for another episode of Wealth and Means. Advice dressed up like hard work.
We hope you enjoyed the range. from rocks to rigs, umbrellas to unemployment stats, and vacuum tubes to vision.
Subscribe, rate, and share this episode. It helps more than you think. And subscribe to our newsletter. You can find it at our website, wealthandmeans.com, please.
We do this for you, to help you have a better week, a sharper mind, and maybe even a longer attention span.
Special thanks to our sponsor, Nost Moments, at nostmoments.io, because the best investments are still your memories.
Till next time, stay curious.
Stay kind.
And keep compounding. Follow us